Frequency Podcast Network. Stories that matter, podcasts that resonate.
Gold is normally seen as a safe haven in times of uncertainty. The precious metal has been on a wild ride this year, up by more than 50%, historic gains, and on track for its best year since 1979. Last week saw the biggest one-day drop in more than 10 years, down by more than 5% in just one day. A little more volatility than gold watchers are used to, and that includes times like post 9/11, the 2009 financial crisis, or even the COVID-19 pandemic. So is this the start of a new trend? Is there more to the story? And does cryptocurrency play a role here? I'm Kris McCusker, and in this episode of The Big Story, we speak to Luis Seco, a professor at the University of Toronto, director of the Mathematical Finance Program. Welcome to The Big Story. Walk me through, if you could, how you see gold, because there have been sort of some traditional thoughts that gold was a safe haven, it was a hedge against inflation. How do you see it?
Yeah, so traditionally, it has been a hedge against inflation. But the things that are happening in the world have given gold a new, unexpected role. As you know, the US dollar and other US assets like bonds, bills, have traditionally been also considered to be safe havens for especially central banks. Central banks is at the or are at the core of the story of what's happening with gold today, which is something unprecedented. I have not seen that at all in the past. If you have reserves, country reserves, you're going to keep them in assets which are safe. And the US dollar has been one such asset, and US bonds have been another assets. But all this cannot be trusted for a number of reasons. Mostly geopolitical reasons. We have witnessed, for example, in the case of Russia, how their assets had been appropriated in the United States and in other countries. So that, given the uncertainty of who is going to do what to whom, having those types of assets, US dollar or US dollar denominated assets, puts them at risk. You just don't know what might happen. Gold is safer from that perspective. You can move it from A to B. You can store it. It does not have to be backed by a government. It is not backed by a government. And as long as people want to have it, it is a good way to store value. And I think this is what we have been seeing lately. It has been the preferred way to store value for many central banks, China and India in particular. And this has driven the price up.
Okay, well, given that as a backdrop, has it driven the price up too far?
Well, it depends who you are now. Because if you are a central bank, you don't particularly care about these small fluctuations. If these are your reserves, you're probably going to have them there for a long time. So whatever happens within a few months is not your concern. If you're a gold trader, that is a different story. Because you're there to not to hold anything, you're there to make profits. So if at some point you think that the pressure has been eliminated to keep the dollar going up for a while, you may want to take some profits, then you sell it, and then you just will probably wait until there is a better time to buy them back, or maybe you want to knock some of those profits into your bank account. Gold has been going up by about 50%. 50% return is a very good return for a year. So we may see what we may have been experiencing over the last few days, may have seen some profit taking on the part of some gold traders. That's my theory. And this would be consistent with what I think would make sense. If you're a central bank, this is not so much of your concern. You probably, central banks have billions of dollars in assets. This is not something that you can move easily back and forth. So your attitude towards prices is going to be very different than if you are a metals trader.
Or for even, institutional or retail traders,
Even more.
it's there's more. It feels like there's more risk or more volatility in the last couple of months if you're trading gold than there used to be.
Of course, because of these exorbitant prices that, again, for retail traders are a big deal, for central banks, not so much. You're just playing a different game. Your time horizon is different and your volumes are completely different. And what we see is a mismatch between the big institutional traders, central banks, and the medium-sized or even smaller retail traders, which are seeing this opportunity and they want to do some profit taking. Is this a reversal of prices? This is what some people are considering. I don't think so. If this has been driven by geopolitics, I don't see geopolitics turning around anytime soon. It is possible that gold has been overpriced in a period of time, given the deployment that central banks have been aiming to have on their reserves. And so I think all this is going to be a short-term lift.
Interesting. And the thing, of course, that's most notable for Canadians is that it's such a big part of our stock market. So seeing some of the big moves up in the price for gold itself, it means big gains on the TSX.
On the mines. Correct. The mining companies are just doing great because this is they are external to this. They are net producers of gold, so gold is going up. And not only that, this actually puts pressure on the creation of gold because, just to give you an idea, the gold reserves worldwide are about $50 trillion. This is bigger than the U.S. economy. If this continues, the amount of gold we have may not be enough. So this is pushing the price of gold up. And if you are a producer of gold, if you can create gold out of the earth, as opposed to just trading, then you are on the winning side of this process.
Is gold at this price, sitting above $4,000, sustainable?
Oh yes, yes. Again, if you think the amount of reserves worldwide is very large. And there still is a lot of reserves in U.S. dollar and U.S. dollar denominated securities. If we continue to see a flight away from the U.S. dollar and U.S. dollar denominated securities, we could see the price of gold continue to go up. Don't forget, the price of gold is typically also quoted in U.S. dollars. The U.S. dollar has been going down steadily against other currencies. So despite the fact that gold has gone up about 50% so far this year, the US dollar has come down about 10. So the gains of gold are still massive, still very large, but not as large as some people will think. If the US dollar will continue to go down, even if the price of gold is stable on a basket of currencies, we will still see the price of gold continue to go up with respect to the US dollar, which will make the headlines in most of the financial publications which are focused on the US market.
Do you have a high end? Like, where do you think gold, how far up do you think we're looking at?
I don't know. I really don't know.
I won't hold you to it. I promise I won't hold you to
no,
any
no, no. I know that I have no. I'm just speaking the truth. I'll give you an example. Imagine that we get into a situation where the United States starts to be more aggressive against the foreign investors, for example. Imagine they start to go against, making this up, to go against China and their bond holdings, for example. Then we're going to see gold go way, way up very fast. if for whatever reason the United States and China, for example, reach some sort of a truce in this fight for I don't know what, then we may see that the price of gold would ease up, and then we'll see it come down. It is going to be a function of a big geopolitics game that's going on. This is very hard to predict. I can't say how high gold would go. I would have never imagined, actually, it would go this high as it is here today. I think we are in uncharted territory, and any prediction anybody can make is, I think, there's not too much of a basis for that long term. Short term, yes, I see some profit taking. I can see a short term reversal. I don't see a sustained reversal for the price of gold.
But the supply side to it is interesting. I guess that's something to watch going forward. And if gold is
especially
ahead,
for Canada.
oh, 100%, absolutely. That's
Exactly.
a big factor for us and our economy and our stock market and many Canadian-based companies. But if it is being, if gold is still being used as a hedge against uncertainty or against inflation, let's face it, there's a lot of uncertainty right now. There's a lot to worry about. So you buy the gold and you put it under the mattress and you don't think about it and wait for things to blow over. And I feel like maybe, if there's some settlement around U.S.-China trade and some settlement around U.S.-Canada trade, meaning less uncertainty. Does that, does the bubble around gold burst?
That's a big if. The answer would be yes. If the uncertainty was to be removed, then I would think so. I think we would see a reversal of gold. I just don't see that happening. I think the United States has a lot of problems, a lot of financial problems, their debt being one. I think they are not going to give up this exercise of hostilities that they have started against other economies, Canadian economy being one of them. So I just don't see that sort of a reversal. But sure, if things go back to the old world order of about a year ago, we could see gold reverting in its trend. I just don't see that.
Because it's actually on track. Gold is on track for its best year since 1979. Very different time now compared to 1979.
In a certain sense, don't forget, in the 70s, we had essentially the U.S.-Iran war, and oil was a big deal. Prices of oil was also all-time high. It was a different situation, but it was also linked to very serious geopolitical situations. It seems that gold reacts to geopolitics in a way which is very special, different from other commodities. So this may be a reenactment of the oil crisis era.
Interesting. Is there anything about what has been happening in the price for gold that you find worrisome?
I find worrisome the cause that gave rise to this increase in gold prices. And in fact, it's the reason that gold is going up, because central banks are worried, investors are worried because of not the price itself. They're worried about this geopolitical situation, this redefinition of international trade, the sustained risks that we see coming out of the United States and their random actions, and how supply chains have been disrupted again after COVID. That's making investors very nervous. It's making central banks very cautious about where they hold their assets and in what form. There's a lot of nervousness out there, and the price of gold is not the cause. It's the symptom that we see reflecting the nervousness that the big players, talking about central banks, are experiencing in this totally uncertain situation we're going through.
Has gold, I started this interview by asking you, gold is a safe haven, it's a hedge against inflation. Is the role of gold changing? Is that shifting? Like it feels like things have magnified or again, with the volatility increasing, like I wonder if the role of gold as a safe haven is any different today or maybe different 6 months from now than it was 5 years ago.
That's an excellent question. And in fact, let me tell you, I think the role of gold has not changed, but this is against some predictions. For example, it has been conjectured that Bitcoin cryptocurrencies could serve as a reserve currency or as a reserve holder for value. We are not seeing that. We are seeing that this is moving towards gold as it has been in the past. These stories, these notions that Bitcoin was going to become another a refuge for saving your valuable assets if you are a central bank, we have just not seen that. So it seems that we're back at gold being the one asset which is serving as the reserve asset, as the safe haven that you go to. We could see that because the price is just so exorbitant, we could see that some of that would divert into, say, Bitcoin or even the creation of new cryptocurrencies. That is just not happening right now.
But you're suggesting maybe it's not happening yet?
It's see, the thing with now we switch into, as you said earlier, this gives rise to a whole set of new questions. What about cryptocurrencies? Let's set that as a question. Could they become reserves? For central banks, they could, but it's very difficult because for cryptocurrencies, say Bitcoin, to become reserves, you need two things. You need people to continue to want them. And so you depend on the market accepting them as valuable. And that for a central bank is very questionable. And second, cryptocurrencies, most of them so far, they suffer from a quantum threat, which is if quantum computing was to happen overnight, they would all probably lose their value and disappear. That is a very scary situation if you're a central bank willing to put, say, $1 trillion of your assets into a single, say, cryptocurrency or something like that. So gold, from that perspective, continues to be the place to go to hold your everlasting assets.
I feel like there could be more to come on this. Thank you so much for your time on this today and your perspective. Very much appreciated.
You're very welcome. And you're right, there will be more to come.
That's Luis Seco, professor at the University of Toronto and director of the Mathematical Finance Program. That wraps up another episode of The Big Story. You can find us on the Seeker app or on all of your favorite podcast players. Please rate, review, follow, and share. I'm Kris McCusker. Thanks for listening.